All right, so here we go. We're going to get started tonight on the Veterans Workshop, and I got a couple questions to get us started off for the evening. First things first is I don't know how many of you have used, are either any of you veterans here tonight? No veterans? Okay, you know a veteran? Must know a veteran to be on here because otherwise this would be information that would be so. So if you're not a veteran and you're on here just for the joy of getting to know more about this, you know, how many times do you think you can reuse your VA loan? Let's start with that question real quick, and then we're going to go ahead and get started, get going on sharing screens and going through all the details of this. How many times do you think you can use a VA loan?
I don't know if there's a limit on how many times you can use. Just can't have more than two at a time or something. It's some.
Well, actually, that's a good question with that. We're going to actually address that here in a few minutes. But how many times can you use it?
Is there a limit? I didn't.
I'm asking.
I didn't think there was, but I don't
I
know.
think it
That's.
depends.
No idea. All right, well, we'll cover that here in a minute. So what's one of the VA loan myths that maybe you've actually run into with either clients or with your friends or something like that? Any myths that you know or have heard? We're going to go through a couple of those here later. Talk more about the myths that we hear in the real estate industry. There's a fair amount of them. So we're going to get going. So welcome to the workshop this morning, and we're going to get going on the VA loan. So first of all, as we get to know you, number one, what are you hoping to take away from tonight? What is something that you're hoping to gather from tonight's conversation on VA loans? Anything specific? Something must have brought you here. Nothing specific. All right. Well, we'll get
Now, you
going.
can just say I just logged on just to see if there were any new any changes, relatively recent changes, I guess is.
Okay. Well, we'll certainly talk through some of that as well. And any of you serve in the branches of military? I think I heard most, I've got a few extra people on here now. Anybody here serve military? No? Okay. All right. So here's what we're going to be talking about tonight. We're going to be doing a general overview of the information. We're going to be talking about entitlement. We're going to be talking about loan types, funding fees, underwriting, more credit information, qualifying information, and items like that. And we're just going to dive in real deep where our goal is to be done in about an hour. And so we're going to go through the details with you as far as what that looks like. And then after this, I'm going to show you how to access this information. We've got some free resources for you so that you can take advantage of them later on, whether it's for you or a veteran you might know. And these are all on my website, which I'll show you at some point later on this evening, and we'll get you set up for success when it comes to helping the veterans in your world get set up for buying a home. So the next thing we're going to do, first of all, is we're going to talk real quick history on VA loans and stuff like that. And just to let you know, it was established after World War II to help veterans re-enter back into civilian life. And it's really designed for veterans, both active duty and those who have retired from the military, in order to be able to get them set up. And really, this is a really big loan, and it's a huge benefit for them because 10% of all the people buying homes these days are actually veterans. And so getting and helping them get set up for buying a home, it's distinctly a benefit for them. And it's something that if you don't know, because there are some idiosyncrasies in this market, that it's very important to understand how these work so that you can get set up for success. Now, just some of the general information on this, and then we're going to get um, into more of it. These loans are generally what are called full documentation loans. What that means is that we have to prove that you have the ability to, in essence, buy this home. We have to look at credit, income, and assets. We have to look at pay stubs, W-2s, tax returns, all that kind of stuff right there. But one of the greatest benefits of the VA loan is that you don't necessarily have to have a down payment in order to buy this home. This is actually really good information for you because it really sets you up to be able to do 100% financing. Now, it's only designed for primary homes. Now, that doesn't mean you can't have, another with several homes with the VA loan on it. We're going to talk more about that later. VA loans are also assumable, so we're going to be going through some of the details on what that means when it comes to assumable loans. As far as credit score requirements, there actually is no credit score requirement for the VA. You do not have to have a credit score in order to be able to buy. Now, some institutions will still override that and they'll require that you have a credit score for the VA, but most of them, you're not required to have one when that's considered. Now, there's no maximum loan amount with a full eligibility, but what they are going to do is do what's called entitlement. And we're going to talk about what entitlement means and how to kind of calculate that. And you can do this on properties with 1 to 4 units on them. So that means you can buy a single family, a duplex, a triplex, or even a quad property. Now, the great thing about these is that they are designed for owner occupants. So as long as you're living in one of those units, it certainly can help you do that. Now, I'm going to do a quick test here real quick. Which loan do you think wins more in a multiple offer situation? Conventional, FHA, or VA? Which one do you think carries the most weight in that?
I'm thinking of FHA.
FHA, okay. Anybody else? Okay. Well, I'll tell you what the real answer
Probably a
is.
conventional.
Conventional, okay, all right. So conventional is popular. There's no doubt about it. FHA is popular, but I think that the real answer to all of this is really whichever buyer is more prepared. Because here's what's happening in today's market is especially in multiple offer situations, the seller is really interested in making sure that the buyer can perform. And so whatever that means as far as from the seller standpoint, they just want to make sure that this buyer is completely prepared and get set up for buying the home. Now, I know a lot of agents prefer the conventional loan because there are some myths regarding how they look at those loans. But quite frankly, the VA loan, as long as you're very well prepared for it, it really is a fantastic way to help you get set up to buy the home. So let's talk a little bit about eligibility and how this works for when we're going into it. So with this eligibility, one of the big things that we have is that veterans who are in active duty or who have separated from separated from duty can actually perform. And the qualifying factors for those is for people who have spent at least 180 days during peacetime and at least 90 days during wartime. You can do it as a reservist, a National Guardsman, as long as you've had a period of time where you've served with them. And spouses, in fact, spouses of those who served and died in the line of duty are also able to tap into the veterans eligibility, especially any of the spouses who had service members. Now, this one right here has actually just changed. You don't have to be age 57 and you don't have to have been remarried. It literally just follows you. If your husband passed recent through the line of service, you literally inherit his eligibility. And this includes all sorts of other places like NOAA, which is the offshore hurricane weather and stuff like that as well. So it's a great service for people who are looking to do this. The eligibility is really based off of not just length of service, but also based on character, which means that you can't have a dishonorable discharge and actually make it through. So as long as you have an honorable discharge and you can get a certificate of eligibility, then that's literally what ends up happening. They give you the certificate of eligibility, and that's what we use to be able to identify how much entitlement you have and how much that will be for you. Now, how it works is the entitlement dollar is really based off of, it's a case by case and it's based off of the county. So the VA will in essence guarantee up to 25% of the home all the way up to the county limits. Now, if the county limits, let me just bring up a calculator so you can kind of follow along with what that means, is if the county limits in most counties, that's 832,000 and change. What that means is they'll guarantee up to 25% of that, which would be typical down payment for most of these homes. That's $208,000 that they will guarantee. Now, we're going to go into a little bit more detail about what that means later, but in essence, they're guaranteeing 25% of the maximum for each county. Now, This certificate of eligibility will show how much has been used and how much is left. And so there's really a couple questions that every veteran should be asking when they're going through this, is they really need to be asking these three questions. Question number one is, what entitlement is going to remain? Number one, if I'm buying a home, and then number two, what kind of entitlement is going to remain after I buy the home? And should I keep my current home if they're looking to buy a new one, or does that mean, what does it look like to win in 5 years? These are really good questions that all veterans need to be asking. Now, the reason why this is important, I'll share a real quick story with you about a veteran who plays into this exact situation. And so in his case, we're going to call him Ben. He bought a home in the Sandston area of Virginia, and he, in essence, bought this home in the fall of 2025. And the reason why this is important is because when he bought this home in the fall of 2025, he used up a good part of his eligibility. Now, I'm just going to use numbers right here so you can kind of see what he did. He had a $400,000 home. He was able to get 25% of that, which was 100,000. Now, the area allowed for 208,000. And so he used $100,000 of his eligibility to buy this $400,000 home. Now, the great thing that happened with this is that he didn't use his entire entitlement for that county. Now, guess what? Fast forward 7, 8 months, Ben, all of a sudden, he had to move. His job with the DOJ, he had literally just been reassigned. He had been reassigned to another part of the state. He was with the DOJ in the Sandston area, and he got moved to the other side of Blackstone, Virginia, which is about a two and a half hour commute from where he was living. Now, that's terrible. You just bought a home, 100% financing. You don't have any equity. What are you going to do? And so he couldn't sell. He didn't have enough equity to even pay a realtor. He didn't have enough equity to even get the money out that he'd put into the house. So what we did is we came in and we looked at his situation, and we decided that the eligibility, he had used $100,000 of the eligibility. And so we went in and we ran the numbers for him again and saw that he had, of the 832,000 for the county, he had used 100,000 of it, but he had $108,000 remaining of his eligibility, because based off of the county limits, that's what he could use. So we were able to pre-approve him to buy another home in the new county in which he was going to buy in. And we were able to pre-qualify him and pre-approve him up to 400,000 because he had remaining eligibility left over. And so this was a great thing for him. Now, typically there are three ways to restore entitlement. In this case, you can pay off the original loan, which is what you're seeing there. You can have another veteran assume the loan, which means that they would take over the entitlement right where it was. If you can also have somebody who's not a veteran assume the loan, but there's risk with that because then they assume that veteran's entitlement and then never lose it. They never get it restored unless they sell or pay off the house. So that's a big deal. Now, the loan is assumed by another veteran, and then otherwise you can use the remaining eligibility or secondary eligibility for another primary residence. Now, in the case of Ben, what he did is we found a way to help him lease out his current residence so that he wouldn't have to make the payment on that home. He got somebody to lease it out, and he was able to then use that to offset his current payment. And we were able to get him into a new home, which would be a primary home at that point in time. Now, that was perfect for him. We couldn't do it as a second home in this case because a second home, the debt proportion would have been too high for him, but we certainly could have done something else. Now, let's say, for example, to get to Juanita's question earlier, how many homes can you own? It all comes down to eligibility. If you're using the eligibility that has in the county, you have on an $832,000 county eligibility, you can get 25%, which is 208,000. But let's say your first home is 250,000. Now you've used 62,500 of the 208, which means that now you have $145,000 remaining of eligibility. So that means that if you bought three $250,000 homes, in essence, you'd have to pay a little bit on the final one, minus another 62,500. you can see that, or plus 62,500, plus 62,500. Now, all of a sudden, you can buy 3 homes on the eligibility if they're all in that same price range because you have enough eligibility remaining. Okay. Now, the underwriters are going to be very careful with this because they want to make sure that you're not, in essence, trying to scam the system in order to be able to win with this. So they're going to be looking at it very carefully to make sure that it's not an investment ploy. But if you're moving from city to city, county to county because of work or something else like that, this strategy completely works. Now, what you do have to do with your entitlement is you do have to prove your eligibility. Now, there's a couple different ways that you can do that. If you're in the actual veterans, there's a DD 214, which is a statement of service, and we would take that, or separation from service for veterans. There's a statement of service for active veterans. And then there is the National Guard that has an NGB 22/23. All of those are statement of services that help us know how much eligibility. Is anybody here know somebody that's in the National Guard? Okay.
No.
Yeah, you do? Okay. All right. So the National Guard would qualify as well with the NGB 22/23. Now they have to have a little bit longer service with them. It's usually 6 years minimum. And so now once we get the certificate, we can go and um, check their eligibility. Do you know anybody who has had the either National Guard or veteran who hasn't ever checked their eligibility? Because that's actually more common than you think. Anybody? Okay. Well, they can actually go to, you can see the website right there, ebenefits.va.gov, ebenefits/COE. They can actually pull their own certificate of eligibility right there. We pull them as well, but we have to have the DD 214 in order to be able to do that. So that's actually a great way to get you set up and make sure that you're helping yourself to your entitlement and making sure that you know what you're getting into and setting yourself up for success, whether it's on your first home, second home, or further down the line. Now, real quick, I'm going to give you a real quick bio on me, is just to understand who it is that I am. Yeah, that's me. That took my photo right there, and I'm lifting a big heavy stone, Atlas stone. But actually, really, what I'm trying to do is I'm just trying to share with you how I work and what I do. I'm Chris Parks Mortgage Group. I've been doing mortgages for quite a while, and most people think that a mortgage is push a button, lock a rate, go under contract and close. But there's so much more to it. I've actually been able to help people buy multiple homes and create wealth through real estate. And so it's really important that people understand that mortgages have so many nuances that if you can hook up with the right person who will guide you, that you can actually make money through real estate. Whether it's a strategy, I've seen so many strategies and helped so many people put together strategies that help them buy homes. And I'm going to tell you that it works. It really does work. In my case, I'll tell you why and how I got started. I got started as with my family. We were very poor, or blue collar, I guess is a great way of saying it. And we really didn't understand cash flow. We didn't have any understanding of how it worked. We had no idea that that when you were getting into debt that you were borrowing from tomorrow's income. It was a mystery to us. It took us a long time to figure out what was going on. In fact, we were so blue collar that literally I didn't even have a bed until I was like 6. So it was quite a bit. It was quite a bit that we had to go through. So we had to build and understand cash flow because we understood very quickly that financial institutions weren't built for people like us. That's just the way it was. They weren't built for people like us. Now, fast forward, we got ourselves out of debt. We built up some cash reserves. We created liquidity. I paid my house off. My parents showed me how to do that. In fact, I'll share in my parents' story a little bit more. They paid off their first house. They bought another one. They paid that one off. They bought another one. They paid that one off. They bought another one. And in essence, what they did is they took a very blue collar background and turned it into cash flow. And that cash flow, my parents are still very blue collar. My dad passed away last fall. In essence, what happened is my mom is living 100% independently right now from the cash flow of those properties. And so that's really what my goal is to help you understand and to help you and your friends and your clients know how to get into this, because cash flow plays such an important role in my life, and I know it can in yours as well. But enough about me. What's the hardest thing that you've seen when it comes to buying a house? And I think a lot of people really get into this place where the hardest thing that they have is really mindset. But if I could answer one question about this tonight, about what might be one of the harder things, I'd really like to do that and make sure that we set you up for success, because I don't work like most everybody does with cold calls and buying leads and paying for partnerships. I devote myself to my clients' needs before, during, and after. And this is extremely important because it's a strategy that is different than others. I don't buy the leads, I don't pay for them, I just create trust. I just earn your trust the old-fashioned way. I work for it. And so that's kind of how it works. Certainly would love the opportunity. If there's something specific tonight that you want to get to know more about, please let me know, because the whole reason I do these classes is specifically for conversations like these. Now, the loan types that we get into with the VA are very, very similar to regular loans. They're going to be 10-year, 15-year, 25-year. They're going to go in 5-year increments. You can get adjustable, you can get fixed, you can put a down payment if you want. You can also do a buy down on the rates. There are temporary and full-time buy downs that you can do. You can do cash out on the refinances with these. There are some refinances, streamlined refinances, but just keep in mind that the funding fees do apply in every case with these. Now, the funding fees are designed to be, well, here's a real question. Does anybody like paying extra fees? Anybody?
No.
You don't like paying it? Why? Nobody likes paying those extra fees, right? Now, imagine if you could find out after closing that if you had a disability status with the VA, that you could have all your fees waived. That's a really big deal, because the funding fee is designed to cover an administrative cost in order to help set it up. But the great thing about the VA funding fee is that veterans, even if they have as little as a 10% service-related disability, they can waive the funding fee. That's a really big deal. And it's designed to cover administrative costs, but it's also such a benefit to the agent, or to not to the agent, to the buyer, because it helps them get into a home that many times they'd have to do additional things with if they didn't. For example, that funding fee is designed to cover losses. It might be also to get set up for other things, but there's no mortgage insurance with the VA loan, and that's a tremendous thing. Now, cost does go up the more you use it, so you keep that in mind. But if you have as little as 10%, VA disability, it literally, you don't have to pay it. And so most of the veterans are kind of putting off going to the VA to get themselves set up for that. They really need to hightail down to the VA and make sure that they get their rating, especially post exiting from the military, because that really does play a huge deal in reducing. Now, here's a graph of what the current VA funding fees are. If you're putting less than 5% down, that's 2.15%. Now, let me show you this in numbers, because it makes more sense in numbers. Let's say you're buying a $400,000 house. That funding fee is 2.15. That's $8,600 that gets added to the loan. So that's a fair amount of money. So if you have a service-related disability and you can get that waived, that saves you $8,600, which on payment, that's equivalent to about $60 a month, roughly. Now, you can see that if you put money down, it actually reduces it. And here's the great thing about this. The VA right now has the best rates on the market. So these are all really good opportunities to help you get use. But now if you look at the subsequent use, in other words, you've already used it once, the funding fee goes up. And I mean, just imagine if you didn't go to the doctor right after getting out of the service and you're going to buy a $600,000 home, think about that funding fee for a $600,000 home. That's a lot of money. And so there's some ways to help you get set up for this that really make a difference. And that one right there is making sure that all the veterans that you know, whether they're in the National Guard or any of the armed services, that they go down to the VA and they establish any service-related disabilities, because that can save them so much money when it comes to buying a home. Now, a couple of things that we do when it comes to these is I asked the question earlier, which loan is the best loan, whether it's an FHA or conventional or a VA loan. I'm going to tell you that it really comes down to preparation, but it also comes down to how the loan officers help you get set up. Because this piece right here, when you receive a pre-approval, what makes you understand that it actually will close? That's a really good question. I know we got a couple realtors on here. What is it that you look for to help you see if this loan is going to close? Well, I'm going to tell you that there are several levels of pre-approvals out on the market. The first level of a pre-approval is where people just make a phone call, they give me stated information, and I tell them, yep, based off of what you have just told me on the phone, I think you can be pre-approved. Now, what does that mean? Absolutely nothing. I haven't backed up with a credit pull. I haven't actually entered the ratios in. I haven't seen where your debts are. I don't know where your income is truly. That means very little. The next level of pre-approval is where I do pull credit, where I do grab a pay stub and I do grab a W-2. Now, that's where most loan officers end, which really isn't necessarily a great place because it doesn't give you a full picture many times of how things are done or how things are calculated. And it may many times not necessarily set you up for success because you haven't asked all the difficult questions that you typically need to ask. And so what you need to find out with this is what level of pre-approval have they done? Because not all pre-approvals are created equal. The type of pre-approval that we do is making sure that we not only get the information, that we ask all the questions, but that we actually also do an automated underwriting through Desktop Underwriter, which is Fannie Mae, or Loan Prospector, which is Freddie Mac. These are extremely important details here because you don't have a loan unless you have the approval from Freddie Mac and Fannie Mae. You just simply don't have it. Now, the next level, those are automated, so data in, data out. Nobody's double checking it but the loan officer. But there is additional information that we typically do when we're going, especially with anybody who's not paying cash for a home, is we actually pre-underwrite just about every single one of our loans. And most buyers who do that don't regret doing that. In fact, that's what you see behind me on my screen, the 5 steps to win. That's part of what we're doing because it really helps set you up for success. And it really helps the listing agent to understand that this thing truly is going to close. Because there's several things that can make a loan fall apart. Number one, not getting the right information. Number two, not getting an automated or an underwriting approval from on the loan. And that's part of what we're talking about right now. Now, Freddie Mac and Fannie Mae set the tone, but some banks also have what are called overlays, which is additional restrictions. And so there is a series of questions that we usually ask or tell people to do when they're vetting a offer that they're getting in. And I'm going to tell you that the buyers who are fully prepared to buy, they don't regret going through the full pre-underwriting and the underwriting because when the offer in a competitive situation is set up, those who are the most prepared are the ones who win. And when we give them the underwriting outcome, we come with a $10,000 seller guarantee that this bad boy is going to close. That's a really big, important piece right there. Now, some of the qualifying information right here. So let's talk about this as we get in. So tell me real quickly your opinion on this. Can the seller pay all the closing costs for a veteran?
Yes.
Okay. Yeah, you can negotiate up to 4%. I left the cheat sheet on the screen here so you can follow. So you can get up to 4%. Now, the great thing about that is if you do get a full 4% from the seller and you don't need it all, with the VA is the only one that allows this, you can actually pay off a car. I've actually paid off cars before to help somebody qualify. It worked great. So another question, can parents give gift funds to a veteran to help them close on a home? It's also on the screen.
I would imagine yes.
Yes, they can get a gift. It's on the screen right there. They have to prove eligibility, but yes, they can. Now, can you also borrow from a 401k?
Yes.
Yeah, you can. In fact, that's one of the most typical ways that we see what you're seeing on the screen are some of the most typical ways we help people get into homes. They can either get the seller to help them with some closing costs. We can get some gifts from family, but many times we also see that if they're not capable of doing that, they can either take a 401k loan or they can also, in essence, go through the process of getting a distribution from their 401k. What they can't do is they can't put it in the name of an LLC. It has to be in the guarantor's name, in other words, the veteran's name, which is a really big piece right there. Now, some of the qualifying information that we have to go through is that you can use other things. Secured assets can also be used to fund these loans. Like, for example, automobiles, art, collectibles, real estate, other real estate, some stocks, CDs, and there's several ways that you can do this. You can take loans out against any one of these, and you can collateralize some of that information there as well. Also, a couple things that you need to take into consideration is that the VA is very old school when it comes to how they're going to do the loans. If you are not married as a veteran, they're not going to give you full entitlement. What they want to make sure that the entitlement is really truly designed for the veteran and for his family. And so if you're not married as veterans, they will now, if it's two non-married veterans that are going in together, you can do that because in essence it splits the entitlement between the two. But on a $400,000 home, just to use the basic numbers, is in essence the 25%, which would be $100,000 in entitlement. They're going to divide that in two, which means that the veteran will get 50, and then the non-veteran will have to put $50,000 of their own money into it. So we've actually had people go down to the Justice of Peace to get their they were planning on getting married, but they didn't get married. So they've gone down to Justice of Peace just so that they could show the certificate and be able to move forward with the veterans. So those are options that you can use as well. Now, seller subsidies can be done. They can be used towards the funding fee. It can be done towards taxes, insurance, whatever it is that you need in order to be able to do that. I mentioned that real quickly in the previous slide that you can actually use it towards paying off debt as well. Now, here's a couple things with the VA. Now, if you actually have a home that's tied up in bankruptcy through the VA, you do lose that portion of your entitlement. And so just keep in mind that that's a big deal because, and your certificate of eligibility will actually say that. So that's a big deal on there. Now, if you do have a foreclosure, whether it's with the VA or with anything else, it doesn't mean that you can't use the VA again. It just means that there are waiting periods for these. And with the VA, it's actually one of the most liberal policies when it comes to this. Anywhere from 3 years to 2 years. And sometimes if you're in bankruptcy, Chapter 13, you don't even really have to wait, but you do have to get approval from the court. So there are ways to actually help you get around this. Now, here's where we get into a little bit of an issue or perceived issue with these. What are some of the scares that sellers have about the VA? It's related to the appraisal. Now, they're myths. They're myths because all of the other loans have these as well. Now, the appraisal is where they take a look at it, and they are a little bit more cautious with it. The biggest one that I think creates a rub is the peeling paint. But I'm going to tell you that every other loan also has that. Even conventional has it. If the home is in a certain condition and it needs some help, it's going to need that. It's going to have to get fixed, regardless of whether it's a conventional or not. Now, it's a little bit more liberated with a conventional, but that's also because you're putting more money down. Whereas with 100% financing through the VA, you're not putting money down in most cases. And so they want to make sure that the home is in decent condition. So some of the myths that we see is that the seller says, oh, I don't want to deal with a veteran because of the appraisal. They're going to require that I fix everything. Okay, well, no, they don't. That's not necessarily the case. The other thing that we see with the VA is that I have to sign what's called an amendatory clause, and I don't want to sign it because I don't want to have to reduce my price. Well, nothing's forcing you to reduce the price. All it's just saying with that amendatory clause is that if the home does not appraise, that you physically cannot force the veteran to buy the home. But that's in every other thing as well, whether it's a VA, conventional, or FHA. And so these are all really big, important pieces in here, but the myths are still there. They're pervasive, and unfortunately, they're misappropriated, and they truly are myths. So now the one place where we do deal with some excitement on the VA is in the condos. Condos have come under a lot of fire recently. And so I think that the big thing with condos that you need to be aware of is that when you buy a condo, let's say there's 100 units in that property, you're 1/100th of an owner of the entire premise. And quite frankly, that makes it very difficult because that means that if 20 of them are behind on their homeowners association dues, you may not be able to fix the roof. You may not be able to fix the heating and cooling. So they're very picky about how that's done, but that's not just the VA. Conventional and FHA also have that as well. But there's actually three really big and expensive mistakes that happen with the VA. Here are three of them. Okay. Number one, assuming you don't qualify. I get so many veterans who come to me who think that they can't qualify. They just don't even just try to buy. I don't know what it is, but they don't even try. And this is a tremendous benefit to these veterans to help them get to the place to where they can buy a home. And so I'm going to tell you that it makes all the sense in the world to try. Understand what you have, try, get set up. So what scares them? What scares buyers? I'm not really sure what scares them, but I am going to say that a lot of them don't even attempt it. Another one that's always a big problem is waiting to ask questions. Many of these people have gone through the military, they wait, they have orders, they're used to taking orders, they don't necessarily do anything but take orders, and they don't ask questions right away. And sometimes they're failing to ask even the most pertinent questions that can actually make sure that they have success. And so this is a really big deal is setting them up. And this is a service and a benefit to them. They've served the country. It's time to do it. And then the next thing is most of the VA think that this is only a one-time use. So now let's go into we're going to take a real quick survey on some questions. I'm going to ask you true or false questions here real quick. True or false? You can only use the VA loan once.
False.
False.
Okay, false. All right. Number two, VA offers are weaker than other loans.
False.
False.
False. Okay. And that's because it's really about preparation, right? Okay.
Yep.
Now the VA requires perfect credit.
False.
False.
That's false as well. They don't even require a credit score. Now, do you have to be active military to use your VA?
No.
No.
Okay. And can you buy a multi-unit?
Yes.
You can. Okay. Now, another myth with the VA is it always takes longer. And sometimes that can be the case. In a VA appraisal, sometimes they take a little bit of time there to make that happen. But I'm going to tell you that we just had one where they had on the addendum that the appraisal had to be back in 6 days. We got the VA to cooperate, and the VA loan appraisal was back in 6 days from ratification, which is amazing. So it doesn't always take longer. That's a misconception. And I'm going to tell you that if you know the answers and you can actually get in and you work with a team who knows how to set the VA up, you can actually win in really high style. So real quick poll here. So far of what you've heard, is there anything that surprises you?
No.
Not yet. My bald head doesn't surprise you? Not yet? Okay. All right. Well, this is fantastic. I'm glad this is good information. I do put more information on my YouTube channel. This is a great place. Grab your phone, hook up to the YouTube channel. I'm going to go ahead and share that with you. This is all really good information for you. And I put information on veterans on here all the time. It's worth your time to come and check it out and be a part of it. Subscribe to the YouTube channel and the conversation. This is that's the link to my YouTube channel right there. This is what it looks like. And tonight you're going to see more information coming up here. I put everything right here. You can see the veteran entitlement calculated there. You can see stories about Davey, about Ben, other ones that we put in here in reference to veterans and how this all works. So please come subscribe. Here is the link to the YouTube channel where you can actually join us there. and certainly love the opportunity to have you join in the conversation. There are actually resources that we have for free. And yes, for free. And all you have to do is go to the parksmortgagegroup.com and you'll be able to go in and download some information. And I'll show you what we have when you come here to the Parks Mortgage Group. You'll come to the resources tab that you see right there. And if you scroll down, you can see we have information for how to calculate, how to save on your rate if you want to refinance in Spanish and English for first-time homebuyers. If you scroll down enough, investors, construction, and then also the veteran information I passed it is in there as well, where you can download and get this information directly from there. So this is a fantastic way for you to get in. Love the opportunity to share this with you. It is free. It's a great opportunity for you to use it, whether it's for yourself or for somebody who you might know. And did anybody come to mind that might be able to use that information? Okay, all right. Well, if it does, go ahead and do that. So here are your next steps as you get ready to get going after you've downloaded all this information. My mission is very simple, is to help veterans understand what they've earned. And so the next steps for the veterans that you know or the veterans that you might be working with is this, is they need to check their eligibility. They need to check their certificate of eligibility to understand what they can do. They need to review their entitlement. And then after that, we need to set up a strategy to help them get set up for success. And so I just ask that you might share this with another veteran, share this information. All this is going to go onto the YouTube channel here in a little bit. And would love you to share that with the veterans in your life or the veterans that you might get to know. This is really designed to help them understand what it is they're doing. So before I leave tonight, there are a few things that I really do want to set up for you tonight. Is that my goal isn't necessarily a referral, even though that is exclusively how I work. My goal is that you feel comfortable enough to introduce me to somebody who might need help when it comes down to VA loans. It's a very important thing because most of these veterans don't necessarily know what they're getting into, and many of them are actually scared to even try. And so it's about understanding how to talk to them about a personal strategy. And you can call me, you can text me, or if you're a realtor who attended this class and would like to talk about co-presenting this to veterans in your life, I'd be more than happy to do that with you. So thank you so much for coming out tonight.
Chris, this is Juanita. I
Yeah.
had a quick question. I just want to make sure I understand that certificate of eligibility.
Yes, ma'am.
That's determined, when is that determined?
At the beginning. I usually pull it right away at the beginning because the certificate of eligibility, I've had people who told me they were veterans, but then when we finally pull the certificate of eligibility, it shows that they had dishonorable discharge, which means they're not entitled.
Okay.
So we literally want to do that before we issue a veteran pre-approval.
Okay. And that's done the first time they get an VA loan. Then you mentioned they could have more than one VA loan.
They can.
Is it determined, say they buy another house? I
Mhm.
wasn't following what you were saying about the 3 or 4 houses based on how much you used with the first one. I'm not
Mhm.
sure I quite followed that.
So the certificate of eligibility tells us how much entitlement you've used. And every county, it used to be that you had a maximum of 144,000, doesn't matter which county you were buying in. But they've gotten to the point where prices have gotten so expensive that they go based off of Fannie Mae county limits. And so the county limits for the Richmond area, for example, are 432,250. I want to say I'm just going to use 832,000. That means I can use 25% of that. That is their entitlement for the Richmond area with that Henrico, Chesterfield, Ashland, Hanover. 832 is the maximum. So that's the maximum entitlement that they can use, which means that if they're buying a $400,000 home, they only need 100,000 of that 208, which means that if they needed to go buy another home later, they would have 108,000. They can transfer the current home into a rental or into a second home and go use the remaining $108,000 of eligibility to buy another one.
Gotcha. Okay.
And as long as you have entitlement remaining, you can do that over and over and over and over again. And once you sell or refinance, and so a lot of strategies let me tell you another strategy. I had a client, I don't remember his name right now. We'll call him John. He was an active duty veteran, active duty military down at Fort Lee, and he wanted to get off of Fort Lee with his family. He bought a duplex, and the duplex was 250,000, and it was in the Colonial Heights area. And what he did is he lived in the property for 1 year. He rented out one side, paid for the house pretty much by renting out that one side. And then he decided that his family, he had another baby, and the house was too small for him, the one he did. So he rented out the one that he was living in, and he went and bought another duplex. This duplex was bigger, it was more costly. And what he did was, in essence, is he now had 3 homes that were paying the mortgages for the 2 duplexes he had. And so he was able to do that, and he still had enough in remaining entitlement to where he could actually go out and buy another home. And so after he was done buying those, he went and bought another, because on the first home it was 250, okay, times 0.25. He had 62,500 tied up with that one, but he had 208 total available. The next home he bought was 300 times 0.25. So now he had that plus 62,500 minus 208. When he bought his next home, he had $70,000 left. Okay, so he was able to use it multiple times. Now, the home that he bought, the third home he bought, was significantly higher in price. So what that means is he had to put a down payment because they only gave him 70,000. The remaining amount was what he had to do. So and I'm just going to use a theoretical number, 400, okay, times 0.25. He had $100,000 that he needed, but he only had 70,500 in remaining eligibility, which means he needed to bring $29,000 as down payment.
Okay.
Okay, so the math completely works with this. It's a fantastic way to help veterans get into homes, and it truly is a benefit to them to take advantage of this, because it works. It works well. Any other thoughts? Any other questions before I let everybody get back to their evening?
No, sir.
Okay, well, thank you so much for coming out this evening and spending a little bit of time with me. And I certainly look forward to serving you or anybody just like you in the near future. Thank you so much. Have
Thank
a great
you.
evening. Bye-bye.